those joint venture interests in some of the other projects that we have very significant. So we'll continue to look to potentially turn some of those into cash to help us monetize and keep well funded as we keep moving the project through these development stages. So shareholding base here is considerably long-standing, very supportive shareholders. A lot of people who have followed Keith for years and years. A few of our great shareholders in the crowd today, and we thank them for their ongoing support. And importantly, management and directors here own 4.4%. It doesn't look like a large number relative to some other companies, but important to understand that almost every share the management and directors own has been purchased either through financings or bought in the market. Keith is buying shares in the market almost every month and continues to do so. So a real sign of management and board alignment with the shareholders, which I think is very important. So for gold development projects, the picture has never been more clear in the 30 years of my career. You have a gold price that's been exceptionally supportive. You now have the share prices of gold and silver producers, both large cap and mid cap, which have started responding to that. You see that with the GDX and the GDXJ lines there. And the bottom line on this chart is gold developers. And we are very clearly in that path. We're advancing these projects through major milestones, but we and a number of our peers have continued to suffer from challenging investor interest and challenging access to capital. So you're sitting today with the value of these gold developers at really all-time lows. Over the 30 years that I've been involved in financing mining companies, the fact that we and others, you can still buy very attractive late-stage projects for less than $10 an ounce in the ground is exceptional value. What's really important on this list is actually the difference in valuation between where the developers are and where the producers are. And that gap, I don't think, has ever been this large. That gap always gets solved through the M&A market eventually, because producers are going to need to replace reserves. Producers, by and large, have not been reinvesting in their businesses, and they've not been having exploration success in order to be able to replenish reserves. So this sets up an environment where larger companies are really actively looking for projects. And if there's anywhere that they want to own projects particularly, it's really two jurisdictions. It's Canada and Australia. Large Canadian gold projects are the premier asset, the most highly sought after assets in the gold business. And we continue to see this. It's a really important fact. Almost every 5 million ounce gold project in Canada that has received its environmental assessment approvals over the last 5 to 10 years has been acquired or has been funded by a partner at valuations of $500 million or more. And we've got 2 5 million ounce plus projects in this company.